Hello and a very warm welcome to HSBC Mutual Fund presents Informed Investing Season 2 partnered by ET Now. I'm Sumit Lakhotia. Now in today's episode, we're focused on India's metro markets, home to tech-savvy, research-driven investors with high SIP participation and a strong salaried and NRI base. Now we'll explore on this episode how disciplined SIP investing, digital adoption and goal-based planning are shaping investor behavior in metros. We'll also look at how NRIs are using Indian mutual funds to participate in the India growth story and how they respond to market movements from afar. Now with that, our theme today is Educated Investors, Evolved Conversations, How to Deepen Client Relationships. And as we explore how informed investors are reshaping the way financial professionals engage, advise and build trust. Also, our panel will share real-life case studies on how meaningful conversations are driving deeper, more lasting client relationships. And I'm joined by a stellar panel of experts. Allow me to introduce them. First up, we have Kailash Kulkarni, the CEO of HSBC Mutual Fund. Hi, Kailash. Thank you so much.
Hi, thank you for having us here.
And we have also with us Gajendra Kothari. He's the co-founder at Etika Wealth. Hi, Gajendra.
Thank you.
We have Ram Prasad M. He's the founder at RP Wealth. Hi, Ram. Thank you for coming here. And finally, we have Anup Bhaiya. He's the founder at Money Honey Financial Services. Thanks, Anup, for being here.
Hi.
All right, gentlemen, let's kickstart things. Kailash, first question to you. We're specifically talking about the evolved investor. So when you talk about investors and specifically maybe in the metro cities who might have earlier started off with, just putting small baby steps into the water, but now they've jumped off the high end into the deep pool of mutual funds. How are you seeing these investors having evolved? What are some insights that you've been seeing?
So, 10 years back, typically a client would come, they would have heard of a particular scheme or a fund and then said, I want to invest in that. They're not really ready to have a discussion. If the distribution fraternity would say, why are you looking at this? They say, I have made up my mind. So they would come and have a pre-decision that 50% of money is supposed to go into A and B. 50%, okay, you recommend to me. Today when they come, it's a very different day and age, They actually come and say, can you help me grow my wealth for a particular goal or for a retirement? These are informed investors we are talking about. But slowly the time is changing from being very product centric to more goal oriented or more long-term oriented, and people are willing to understand what the true essence of asset allocation is.
Right.
Otherwise, the entire thing would be skewed to either equity or to fixed income, depending on the risk profile of the customer.
Right.
People now are willing to take that, saying that, okay, I need to put it into different baskets. I think this is a big change that I've seen with some of the more qualified investors who are now stepping into the market. And now what has happened is over the last 10 years, they've also made a lot of money. So now they are more careful with their money and wanting to do the right thing in the right way.
Fantastic. That's a great observation. Gajendra, I'll just take it to you also. This important part about how the investors are becoming more kind of focused on goal-based or thinking about their goals before they're doing the investing. What are your observations in this?
So true. As Kailash rightly mentioned, earlier when they used to come, they would just go with the schemes with the highest returns, last 1 year, 3 year, 5 year. Though that is still, it is important, but their conversations, nowadays we receive a lot of mails from investors first time saying that I want to plan this for my retirement or this thing, can you help me out? So there is the word goals linked to your investments, and we always onboards client, we says no portfolio without a plan and no plan without goals.
Right.
So that's our mantra kind of thing. So because we don't know otherwise what investment is for which goal, and even if you're getting 15% return, it doesn't tell you anything. You may have beaten the markets, beaten the benchmark, beaten other competitors, but you have reached nowhere, right? So you have to tag it to some goal. And by having goal-based approach, we can tell our investors whether you have to run, sprint, or you are good enough to walk towards your goal. So it's much more evolved, and it has gone a step beyond. Now we have started questioning our investors when they tell us their goals. We even question on their goals also. Many people come to us and say, Gajendra, I want to retire at 45. Why 45? What you will do after that? Tell me in detail.
Correct.
Unless we get a convincing answer. So we are not just a financial advisor, we become a much more kind of a what do you say, psychologist to get to know deep about what they're looking for.
Exactly. I was actually going to go to that question, and Ram, I'll come to you with this question, because it is the financial advisor, the distributor is no longer just it's not just a transactional that, okay, this is, I bought this and now I'll redeem it for you when you want it. But the hand holding, the behavior, the guidance, especially when, when markets are up, everyone's happy. But when markets go down, that is when the real help is required. Your experience and how are you seeing things changing, evolving?
It's not like doing a transaction. It's like getting into a lifetime relation. When I say lifetime relation, we are involved in all his financial decisions. Sometimes maybe in personal decisions. They talk to us for a wedding, travel, everything we are discussing. And now clients have come to a stage when they invest in mutual fund, the losses we talk now, people are scared of losing their capital, right? Now it's clearly known to clients that whatever money going down, it is a partial and temporary loss. It's not permanent or full loss. People have understood this logic. Now people are not scared of market.
But that's great because they're understanding the ups and the downs.
Yes.
And more importantly, working towards with their goal and with a good relationship with their advisor.
I say one line to my client, it's not how hard we working. It's that how hard we make our money work for us. That decides the future. Your salary is not permanent and your age, your health, nothing is permanent. If you can make your money work for you, that's permanent. That has no retirement. That never ask you for vacation. Make your money work for you, then you can achieve anything.
That's very well put, Ram. That's a great line. Anup, one other part is these conversations that you have with your with the customers, with the clients. It's also about educating them constantly, but of course it's also about the level of education, because now you can't talk to them about the basics. Again, how are you seeing things change? How are you handling this change at your end?
Let me, before I answer this question, let me answer the questions which you had asked to Kailash. I started my career in '99, and when I used to go to the client and present a mutual fund, they used to look at in a suspicious way. And most common answer was, fund manager paisa banayega, humko kyun paisa bana kar dega? That was a very common answer from a client perspective. In today's parlance, that is not the case. Today, I think clients are open. Clients are wanting their share of their investment into the mutual fund, basically. Now, coming to in terms of the product understanding, they don't just ask the flexi cap kyun chahiye. They also look at why this one scheme you are giving me a multiple family portfolio. The overlapping of the portfolio or a duplication within the portfolio, they all ask those sort of questions also. So I think client have evolved. Client ask a lot of questions in terms of on the schemes, fund managers, and other things also.
That's important.
Sumit, I just want to add one thing, which is because it kind of triggered by what he said. Earlier, majority of the clients, they only wanted a face-to-face. Today, a lot of clients are okay by communicating through technology,
right,
and getting the advice.
Exactly.
Which is very different. In fact, in Anup's case, that's majority of the clients are there. So long as you can give the right kind of solutions to them, they are okay doing that.
That's actually what I was coming to, because how are you seeing the technology aspect coming into kind of, like you said, the clients are now more and more okay to interact via technology, but are you also seeing them using tech to be more updated, coming up with more queries saying that, listen, this is what my research was online, what do you say?
So absolutely, I mean, see, tech is free, right? Today, you just punch in a few words or talk in your phone and it gives you 15,000 options which are there, and then you can, it's very easy to form an opinion and say, oh, these 3 schemes are the best schemes that are there, or this category is the best category. And then earlier, 5-7 years back, the client would actually challenge them, saying, you haven't recommended this category, pharma has done so well, then why have you not given it to me? And then they would take pains to say, listen, I'm not giving you thematic funds, I'm giving you broad-based fund. So there was that part. Today, the more evolved customers don't ask those questions. The more evolved customers, they may do their homework, but they would not challenge. They would listen to a good advisor, distributor, and say, okay, I understand why you're saying that. That's because the conversation has gone from being return-centric to a little more, like we talked about goal-centric or future. And like Ram said, people are willing to understand volatility. That's a big change that we are seeing today in the market. So while they do their homework, let's not kid ourselves. Every client who walks into your office has already done their homework about you, about your firm, and also about all the products that are there, right? But they still want that validation because they know they are not the best in it.
Absolutely, to give them that guidance that they need from an expert. I mean, that's eventually why people also do come to a mutual fund also, to get that expertise easily. Ram, one thought also happens is that how are you seeing, while we've got AMFI numbers saying that, SIPs and of course the overall AUM of the industry has grown tremendously and it's fantastic there. But on a case-to-case basis, are you seeing the amount of SIPs increasing? Because there's also this one end, where someone might have started 1,000 or 5,000 monthly SIP a long time back and just happy with that. But are you seeing either those top-up SIPs happening or people coming in and saying, no, let's put a larger amount in SIP?
Sir, beyond the point, what has happened is, initially when we have the first meeting, we'll ask them to create corpus for certain goals. One, they achieve in a short period. One, they get to know the power of mutual fund. Now they're redeeming other assets and putting money here. With that, they achieve the goal. Now the goal has become not achieving your goals. The goal has become creating more money. Now it's not marriage determined. It's 10 crore, when can I see?
Wow.
Now people like Gajendra are inspiring people to aim 100 crores. Now people, sir, can we see 100 crores in the next 10 years? That's the question. Now it's not that we are teaching clients. Most of the time we get inspired from the client. We are learning a lot of things from the clients. Today we have got such a mature clients. They come and teach us, they give us knowledge. That's what we are passing on to the other clients. It's not that we are educating them. Behind the point, the goal is not achieving goals. The goal is to create more money for you. When you have the long hair, you can have any hairstyle. I wanted people to grow the hair first, then you can have your own hairstyle.
So true, so true. But that's a very interesting insight, because that is not something that we would have assumed usually would have happened. Gajendra, I'll be a little devil's advocate with you, because to what Kailash's point was that, earlier the customers kind of would be challenging the distributor or the advisor that, listen, this is what I read, this is what I saw online, this is what I saw on TV. But how do you tackle that? Because I'm sure while, Kailash is saying many of them have come as matured, but there might be some who would be like, "Arey, मेरे दोस्त को ये return मिला इस fund से, तुमने मुझे क्यों नहीं बताया?"
Correct.
How do you talk to that person?
So, compounding, just like investment, works also in knowledge. You have to keep hammering the same thing for 20 years.
Yeah.
We always tell our investors, we are not managing your money, we are managing you, your emotions.
That is so true.
That's
so
what
true.
For what we are getting paid. We don't know which is the best performing fund. We don't know which is the best time to enter the market. No, none of us knows. Our role is to make sure that we create plan for you. 20% of our role goes in creating the plan, the goal-based plan. 80% of our role is making you stick to the plan.
Right.
Through all the highs and lows of the markets.
Absolutely.
So that last 20 years, that thing we have done, buy low, sell high, or when markets fall, you should not worry, you should be happy. Warren Buffett says if in the next 10 years you're going to put in a lot more money, do you want the markets to go up or go down? It's a very logical thing, but somehow people don't understand. So, for the first time, what we saw in March, April, when the markets were down 18, 19%, on April 7th, we received hundreds of calls saying that it's a great time.
Yeah.
Gajendra, now tell us, should we put our money or not? It's a great time to enter. In that one day, Sumit, 700 transactions happened on April 7th when market was 18% low. 10 crores money inflows came in on the bottom of the market. And that was not our call, clients called up. So we were waiting for the 20% fall, that after 20% we'll write to our investors, that now technically it has entered into bear market territory, and as discussed and as over a period of time, we should now invest. But now investors have evolved, as you rightly said. They now know that when markets go up, it has become more riskier, their investments or whatever. When markets go down, they should have some cash to go on. And as Ram said, they are willing to withdraw from another assets and to buy the dips.
Yeah.
So I'm quite happy to see that evolvement in the last 10 years. Mutual fund industry has been there for the 50 years now. And if you say the private industry also 30 years. But what change we have seen in the last 5-7 years is unprecedented. And for good. And now we are seeing the average tenure of SIPs is 5-7 years.
Yes.
At least with the help of a right guidance, right? I can't say the same about DIY investors for sure. And larger amount SIPs are coming. It's not that 5,000, 10,000 people are now linking their SIPs to goals, and as far as, till their goal is achieved, they're willing to stay invested. So it's a big positive change. I think we still have a lot more work to do through these programs, awareness. We still have 7% of the Indians investing.
Yeah.
So I think another 50 years we all can be busy.
Well, on that note, it's time for a very short break, but this special episode of HSBC Mutual Fund presents Informed Investing Season 2, partnered by ET Now, continues on the other side. We'll be right back. Welcome back to HSBC Mutual Fund presents Informed Investing Season 2, partnered by ET Now. My conversation with Kailash Kulkarni, Anup Bhaiya, Gajendra Kothari and Ram Prasad M continues right here. Kailash, I want to talk to you about the NRIs. Your thoughts, how are you seeing NRI contribution to the mutual fund industry? I know it's rising, but again, any observations from that? Any conversations that you've had with people?
So, we've been doing, as HSBC, we've been doing a lot of roadshows globally to say why India now. And there's a huge excitement, not just with Indians, even with global citizens who have to find a product which is a Luxembourg-based product or whatever, investing into India.
Right.
But clearly, given the situation the world is in right now, I think there is nobody who is disputing the fact that for the next 10 years, India will be one of the countries which grows the fastest, amongst the more major economies in the world, percentage-wise. And I think that is what is now getting in more people. Second, as compared to 7-8 years ago, now there are more examples of success which are there to talk about, and people are talking about it. So that is the second big change which is there. And third, like was said, people are willing to accept that yes, they didn't know it, they tried a hand at everything. So they are now saying, okay, I need help. Right? People are saying, okay, I need a financial advisor, distributor to help me in my journey to achieve my goals.
But then, so Ram, I'll take this point ahead, this last point with you, because exactly like you can file your returns online also, and you need a CA also, you can choose whichever way. Similarly, now you can have an advisor, registered investment advisor, you can have a mutual fund distributor, or you can go direct also. What are clients talking to you, or have you had people who are saying, nee, I don't want the distributor, I'll do it on my own?
There are few people, I say welcome. Because we wanted everyone to participate in the market. It's not direct or regular is never a concern for us. Because I say one logic. When you get to know, when you are a direct investor, assume that you get to know you have chosen a wrong fund. Whom do you scold? Scolding yourself will hit your health.
Right.
Is it the cost of losing your health? No. If even I end up choosing a wrong scheme for you, then you have a choice to scold me. That's not hitting your health. Nothing at the cost of health is worth doing. If it is hitting your health, leave it. Be it investment, be it relation. That's what I tell my people. If you are a regular investor, I am there to protect your wealth as well as health.
No, and very good analogy. And so just to add this, see, Sumit, when you play gully cricket, you don't need a coach. But when you represent the Indian national team, you need a coach.
Absolutely.
Because the World Cup is at stake. Right? So when you are starting with 5-10,000 SIP, you may not get access. And that is why you go online and do it yourself. But the moment your portfolio crosses 25 lakh, 50 lakh, and then you have 25 questions hitting you, Trump barriers, this and that, you don't know whom to ask.
Absolutely.
Right? So you have so many distractions. That is when you need a trusted hand advisor who can answer all your questions 24/7 technically. You can reach out to him. And he's your go-to person for any such thing.
And another just wanted to point, what happens most of the times when you do it on your own, most of the times you maybe get into the fads or a fashion or a trendy schemes. Many times there is an opportunity maybe in the contra. You will never get that opportunity.
Correct.
If you have somebody on your side, maybe an advisor or a RIA, they will present you opportunity where people are not talking about. So that is where something like you make a lot of information. How do you declutter that information? A conclusion from your side as an investor, what you conclude from the same information, and what I conclude as an advisor as a conclusion of the same information could be completely two different things. Right. So I think those things, I think the perspective gets different, and because of that perspective, maybe you can get right decisions.
Absolutely. And in fact, I wanted to take what Anoop's point was, just one more step ahead, Kailash, to you, is the emotional angle, emotional bias or whatever you call it, because this is my money. If I'm managing it, I'm kind of more worried and all. I don't look at it from a external or a distant perspective, but as a advisor is there, or a distributor is there, or someone expert who's guiding is also coming in from a neutral point of view. I might be more worried ki I'm thinking worst case scenario.
Yeah.
So are you seeing that trend slightly again change now, because
people wanting more advice, I mean, a better quality advice?
Yes.
Yeah, absolutely. In fact, let me tell you, most of the very, very good advisors, their money is managed by some other good advisor. They don't do it themselves. Just to take it to his point, how can I beat myself, right?
Yeah.
So I trust somebody else who's equally good. I have full faith in him or her, and he or she manages my money. So that's a change which we are seeing today. And very clearly, the evolved investor is happy to be associated, and he wants to see what is happening. Like I said, he wants to have control, but not necessarily take decisions themselves without guidance.
Right.
And that is clearly being seen across length and breadth of the city. I'll share with you a live example. Last week I was in a smaller town, and one of the persons during the Q&A raised his hand and said, "Sir, can I ask you a question?" He said, so I said, over the years, I've been investing for 12 or 14 years now, and I made a lot of money in the mutual fund. But now when I look at my portfolio, I have 73 schemes. Do you think it's the right thing to do? And honestly, if you ask me, if you go to many clients, not 70, but they'll have 20, 25, 30, you know, because over a period of time, you have bought this NFO, that NFO, this scheme, that scheme, but you've never looked at it in terms of overlap. You've never looked at it in how many similar schemes you have. So, you know, those things are now starting to hit there, because they're also reading up about it. Why asset allocation is important. Why.
And people also, you know, the tax harvesting bit also comes, I think, when you sit with an expert who guides you. Otherwise, people might not realize it, that you can sell to a certain amount and not be taxed for that. So that helps you kind of remove the overlap also, you know. These kind of nuances definitely help. Kailash, one more point is, are you now, would you say that maybe SIPs are no longer just kind of a saving thing? They are a wealth generating engine. You know, at one point of time, maybe somebody would have said, let me save money, put it in my cupboard, or put it in the bank, or put it in an FD. But with SIPs, they've now become like wealth generating engine.
So I think SIPs as a saving thing has died long back. And you know, today, how people are looking at SIP and how they used to look at it earlier, they would decide a amount and they'll say, I'll do so much SIP. Today, that's not the case. They say, this is my total income. This is my fixed expense, which I have to do every month. This is my expense, which is discretionary. Yeah. And after all this, this is what I have left. And 80 to 90% of that is what I'm willing to do in SIP. So if I go to a client and I think by judging by him, I'll say, okay, this guy, I can take 10,000 rupee SIP. If I use this formula, actually the SIP can become 25,000 rupees. You know, people underplay it so much, right? Or we underplay it so much that we don't believe that that guy can be more than 10,000 rupee. So we say, ha, 10,000 ka kar lo. But actually there's a science to this madness. And if you apply the right science, the SIPs just quantify and go up significantly. And I think the SIP books which all these three gentlemen run are very substantial, you know, and this is the reason why.
Well, I would have loved to have the conversation going longer and longer, but we're running out of time. Thank you, gentlemen, for your time, for these invaluable insights that you have shared with us. Ladies and gentlemen, you've been watching this special episode of HSBC Mutual Fund Presents Informed Investing Season 2, partnered by ET Now. And I'm sure you're taking back some very valuable insights from our conversation. Thank you so much for watching. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.